By the end of this video, you guys are going to be able to learn how I was able to pretty much catch over 2.61 RR trade, 5.17 RR trade, and I'm going to be showing you guys my entire entry model that allowed me to capitalize this beautiful high RR trade setup. Now, I want you guys to be staying until the end because there are some juicy stuff that you guys need to stay, because somewhere in the middle of this video, the third step is the most important part. So let's get right into it. And yes, you guys can actually see my free Discord. I did take this trade right here. If you guys join the free Discord, you'll be presented with this beautiful free channel, which you guys are going to gain access with my free weekly webinars. And not only that, you can see that I did request a beautiful payout from this beautiful trade as well. So yep, the trade was a lovely trade. So before we move on, there are a few things that you guys need to learn before you're able to understand why I really took that trade. One is understanding what fair value gaps are. Now, if you guys decide to skip this part because you're like, oh, I already do know fair value gaps, well, I suggest you guys to stay the whole thing so that you'll be able to know, because there are actually some parts that you might actually say, yeah, I really did not know that about fair value gaps. Now, looking to this beautiful price action right here, majority of the time, when you guys see price structure that looks kind of like this, I know most of you guys are going to be marking this level as a probable fair value gap. Okay, this point of interest is something that you guys would like to call as a fair value gap. And I gotta tell you guys something, you guys are not actually wrong. Now, the problem that most of you guys actually do is that when you mark your fair value gaps, you don't even know what time frame you guys are looking at. You don't even know that this fair value gap is actually a roadblock in the higher time frame. And when you decide to take a buy right here, you are gonna get some buy reaction and you're just gonna get invalidated because you don't know the market direction. The entire trend is going to the downside, and you decide to buy in this fair value gap because you think that it's time to be bullish, but in reality, the overall context of the market is bearish, then you just get taken out. Now, this is going to be one of the most important parts. I suggest you guys to really listen, because if you don't understand this part, taking fair value gap trades is you're just going to end up hitting break even or even a full 1 RR loss. The first step is you got to be understanding your market context. Now, what I mean by context is you want to be jumping over here and you want to be taking a look into what your higher time frame is telling you. Well, clearly during this moment, I know that you guys are going to be saying that, hey, the overall trend is bearish. Well, obviously, looking into this alone, you can clearly see that the entire market has just been going down. Goes down, pulls back a bit, goes down, ranges, and more expansion to the downside. And the secret for this is, how do you know that the market is actually bearish? Well, what you do is you want to be grabbing this measuring tool right here. Now, I want you guys to understand that you want to be marking your highs and all the way to the lows. And you can see that it took you pretty much 8 hours for this big impulse to the downside. Now, the entire accumulation, yep, it took you over 3 days. Now, the next expansion took you around 3 hours. When you see something like that, this allows you to give an idea in your head that the entire context of the market is pretty much leaning to the downside. Meaning, if we're going to be looking for sells, we just want to be looking for sells to the downside. So that means if we're going to be looking for a trade, we don't want to be taking any buys. We want to be waiting for a pullback for a sell level before we taking a big short to the downside. Now, looking back again, this is going to be the bullish example. Well, obviously, you guys are going to be marking your fair value gap around this level. And if you guys are going to be in a bearish side, you're going to be marking your fair value gap something like this. Now, when you see these two fair value gaps, and a lot of times where if the market is pulling back up, like for example, something like this, majority of the traders is that they would always be looking for a buy fair value gap. Like for example, during this moment right here, when they know that the overall context of the market is very bearish, they would be marking this fair value gap. Sure, you can play the fair value gap. You can see we did have rejections here, but the problem is that the entire market is to the downside. You cannot play from this fair value gap and expecting to play for a push to the upside here when the momentum is definitely pulling to the downside. So if you have a fair value gap right here and then the market direction is pushing to the downside, all you want to be doing is waiting for market to pull back to these fair value gaps. And when there's a counter fair value gap sell scenario that's going to show up, that is going to be the best time for you to sell. So now, looking to this example again, this fair value gap is just going to be your key location. Okay, now you already have your location in play. Now, once you have your location in play, all you want to be doing is waiting for price structure to be pulling back into your fair value gap and to be looking for another entry model. And stay until the end because the entry model is going to be somewhere around this video. And yeah, let's just get into it. So looking into this one, I want you guys to understand a few things. What really happened with gold over here? Now, the overall context of the market is clearly to the downside. Let's try to take a look to the 4 hours time frame with what we have. Now, looking to the 4 hours time frame, you can clearly see there is a 4-hour fair value gap. I would like to mark the H4 fair value gap. Not only that, a little bit below right here, you can see we do have a fair value gap between this level. This is what I'd like to call as the 4 hours fair value gap, H4 fair value gap. That means that when the market comes back to this fair value gap, I would want to be looking for some execution. Now from this H4 fair value gap, we can have a refinement all the way here for the H1 fair value gap. Now, the moment I mark this H1 fair value gap, this allows me to have an idea that if we pull back around this level again, I will still be looking for shorts. The entire pool of the market, the entire draw of liquidity of the market is definitely to the downside. You can clearly see that we do have all this buildup of somewhat equal lows right here with all the liquidity buildup right here. I wouldn't really say that's full on equal lows, but you can see there's a lot of relative buildup of liquidity around here. Now, what I would really want to be doing around here is the moment that we tap inside this H4 fair value gap. Okay, so when the market taps to our gap, we want to be looking for something like this. Now you can see the market is obviously developing in our fair value gap, right? And you can clearly see right here. Let's wait. Again, we see this big push. What I'd like to do is you would want to be marking your fair value gaps. Obviously, you have a beautiful bullish fair value gap. And there's going to be an area where market participants are going to be looking for longs. They're like, hey, I want a long right here. Okay. But the next step you want to do is you want to wait for this fair value gap to fail. Okay. Now you want to wait, play. And the moment that this fair value gap fails, and the moment that this fair value gaps gets invalidated like this, is a perfect opportunity for you to start executing. Now, what I'm going to be doing is I'm going to be selling 100 contracts of gold around here, just like this. And where is going to be our take profit? Our take profit is going to be all the way to the lows. Okay. Something like this. Now, I want you guys to understand this very quick logic with what's currently happening. If you have a bullish fair value gap that a lot of market participants are looking to take for an entry, the moment that a candle closes way below this fair value gap, this would give you a confirmation that the previous control of the buyers are gone. The buyers that are looking to passively buy in this level are getting invalidated. So the next step is for them to close their long position. They have to cover their longs. Hence, this level becomes a powerful level for short, and you would potentially get a push to the downside. Now, look into this right here. This is what I'd like to call what everyone would pretty much know as well as a bullish or a IFVG. A previous beautiful buy fair value gap got invalidated, thus becoming an inverse fair value gap. So what I did right here, pretty much took my short position, placed my stop loss right here. And before that, I'm going to be breaking down the next trade, pretty much this one right here that ran over 10 RR in my free Discord. I'm going to be uploading a free exclusive trade recap as well also here in my free Discord. Make sure you guys join because we do have another weekly webinar pretty much next week. So make sure you guys tune up for that. So looking over here, make sure that you guys can see this beautiful entry, stop loss just above the high, and your target is going to be all the way down to this sell side liquidity, or which something I'd like to call the external range liquidity. And if you try to play this out right now with the 5-minute chart, you can see that the market is running beautifully right now, and you can see London session open, and we're just dumping, smashing our take profit. Oh yeah, it looks so good. In hindsight, I took the trade right here. I took this beautiful trade. I had a minor break even right there. I was testing the orders. Took my sell, take profit, took another sell, which is something I'm going to break down in my free Discord. And I got a trade recap right there. So if this video actually did help you guys, make sure you guys press the subscribe button and comment down below what type of videos that you guys want to see next. So I am going to be making that type of video. I'll see you guys next time. JCAC Trades.